Green Limited. The profit before tax of Green Limited for the year ended 31 December 2022 amounted to 840,000. For 2021, the loss before tax of 702,000. Dividends that are not taxable amounted to 60,000 and 2021 48,000, and donations paid that are not tax deductible amounted to 10,000 and 10,000 2021. Why did they provide us with this? Remember, in your current tax calculation, you will have to start with your profit before tax, identify all of the line items where you need to take out your accounting and include your tax to be able to calculate your taxable profit or loss, right? As at 31 December 2020, the deferred tax liability amounted to 12,150, which related only to equipment measured using the cost model. Now, when you look at this, the deferred tax liability, now how did they get to this? Think about your deferred tax calculation, carrying amount, tax base, temporary difference, and your deferred tax. Therefore, 12,150, this is a liability. Therefore, we provide to pay in future based on a taxable temporary difference. Therefore, our temporary difference will be a taxable temporary difference. We will debit our deferred tax in our profit and loss and credit our deferred tax liability statement of financial position. Right. Equipment is recovered through use. Therefore, we know not CGT, not sale, through use. As at 31 December 2021, the taxable temporary differences relating to equipment amounted to 30,000. Now, if you look at our deferred tax calculation on the right side, look at our table. They indicate to us the taxable temporary difference in our temporary difference column is an amount of 30,000. Therefore, we know taxable temporary difference will result in a deferred tax liability. As at 31 December 2022, the taxable temporary differences relating to equipment increased with 67,000. Therefore, that 30,000 increased plus 67,000, and the total will now be 97,000 taxable temporary difference, a deferred tax liability. Except for any unused tax losses, the temporary differences on the equipment are the only temporary differences of Green Limited. The normal income tax rate is 27% as at 31 December 2021 and 31 December 2022. The company's directors are uncertain about the ability of the company to generate taxable profit in future, as the budget for 2023 reflects an operating loss. Right. Now, you will remember, paragraph 34 indicates to us that we may only recognize a deferred tax asset if it is probable that there will be future taxable profits. Therefore, this is our first question, and this will be no. Therefore, they may not recognize a deferred tax asset. Next question, will there be any taxable temporary differences? Yes. If you look at the information provided, look at the right side of your screen for me, please. They've indicated to us that we have a taxable temporary difference in 2020. And we have a taxable temporary difference in 2021 of 30,000 and a taxable temporary difference in 2022 of 97,000. Therefore, we are able to identify that we may recognize a deferred tax asset to the value of our taxable temporary difference. Now, if we look at this, as at 31 December 2021 and 2022, they were uncertain, but there is taxable temporary differences. Prepare the following notes to the financial statements of Green Limited for the year ended 31 December 2022. The income tax expense note and our deferred tax. Now, normally, guys, if you get a question, I want you to always have your plan of action, include your templates. Your template in terms of your current tax calculation, your template in terms of your deferred tax calculation, and then your notes, right? Then, number 2, you work through the information and you complete your calculations. And very important, if you need to prepare the notes, you need to transfer your information to the notes. If you're not going to transfer the amounts, they're not going to mark your notes. Okay, have a plan of action, please. Right, now, first, if you look at the solution, please don't run away. Breathe. First, I'm only going to focus on the temporary differences. If you look at the left side, we have our current tax calculation. Now, I assume by now you know how to calculate your taxable profit or loss before temporary differences. We've covered this in our first lecture. Right, now, if you look at 2021, we have a loss of 740,000. 2022, a profit of 790,000. Now, we need to include our temporary difference. Remember, we obtain our profit before tax. We know that we have our non-taxable, non-deductible items, and we have our temporary differences, amounts from our deferred tax, to be able to get to our taxable profit or loss, right? Now, if you look at our movement in terms of our temporary differences only, and you look at the right side of the screen for me, please. Deferred tax calculation. Now, I've included 2020's details, 2021's details, as well as 2022's details. Now, they've indicated to us that there is a deferred tax liability. If you look at the information provided, they've indicated to us there's a deferred tax liability of 12150. We are able to identify that if this is a deferred tax liability, that our deferred tax liability divided by the 27% will be our temporary difference, the 45,000. Right. Then they indicate to us in the scenario that we have a taxable temporary difference of 30,000 for 2021. Therefore, 2021, 30,000, therefore, a deferred tax liability of 8,100. And again, taxable. Remember, taxable, therefore, deferred tax liability, deferred tax liability. Right. Next, then they've indicated to us in 2022, as at 31 December 2022, the taxable temporary differences to the equipment increased with 67000. Therefore, plus, we need to read carefully. Therefore, plus the 67000, and we will have a total taxable temporary difference of 97000, resulting in a deferred tax liability of 26190. Right, now we need to determine our movement. If you think about 2021, remember, please look at the left side for me, please. 2021, our movement will be current year minus prior year. Our taxable, we have a taxable temporary difference for current year to the value of 30,000 minus 45,000. Therefore, the movement is, the movement is 15,000. Now, if you look at this, our taxable temporary difference decreased with a 15,000, right? There's a decrease. If we look at our 2022, our current year is 97,000 minus our prior year, which is the 30,000, and our movement will be an amount of 67,000, and this will be a positive. Do you see, guys? Okay. Now, think about your journal when you include this in your current tax calculation. If you look at our journals on the pink block for 2021, we are able to debit a deferred tax asset, or guys, if you had to debit a deferred tax liability, that's also fine. I'm just going to explain the credit side. Remember, we credit our deferred tax in our profit and loss. In 2022, we debit our deferred tax in our profit and loss. In our calculation, think about this one. In our calculation, we add the 15,000 and we deduct the 67,000. Remember, if this is an increase in our taxable temporary difference, we provide to pay tax in future. Therefore, if we provide to pay the tax in future, this will decrease our current tax because we're only going to pay this in future. Okay. Right, now, if you look at the right side of your screen for me, our deferred tax calculation, I want us to have a look at our effect in terms of our unused tax losses. Right, we are now going to focus only on the unused tax losses. If you look at our current tax calculation for me, please, and I'm going to make use of purple, current tax 2021. We have cumulative tax loss to the amount of 725,000. Right. Now, in our deferred tax calculation, we may only recognize a deferred tax asset to the extent of our taxable temporary difference, right? Therefore, only to the value of 30,000, resulting in an amount of 8,100 deferred tax asset. With me. Now, in 2022, if you look at our current tax calculation 2022, we have recognized a taxable profit of 723,000. Now, we want to use that prior loss of 725,000. We want to use that loss in the current year. But remember, we've only recognized a deferred tax asset to the value of 8,100. But we may use that 872,500 because the standard indicates to us if there is an unused loss in prior years and we've identified that there is sufficient profits in the current year that we may use that 725,000. Now this will result in a loss of 2,000 for 2022. Now, if you look at our deferred tax calculation for me, in 2021, I've not included, now I'm lying guys, sorry. In 2021, I've recognized the unused tax loss relating to 2021, only 30,000 in terms of our taxable temporary difference. Now, in 2022, I still have 2,000 left, and I may recognize my deferred tax asset relating to that 2,000. Quite a mouthful, I know. Okay. Now, I want you to look at the deferred tax calculation for me. And I'm going to explain the movements. Remember, you need to calculate your movement, which is your current year minus your prior year. If you look at the movement of our unused tax loss, the current year is the 30,000 minus 0. If you look at the movement for 2022, we have 2,000 minus 30,000. Therefore, a minus times a minus will be a positive 28,000. Before we move on to our note, I just want to mention something on this page, please. Look at the top green block for me. Of the 725,000, remember now, if you look at this, 695,000, which is the 725,000 minus 30,000, is unused tax loss. It's an unused tax loss, which is not recognized. Remember, we used the amount in 2022, but we did not recognize this amount. This amount will result in a reconciling item in your tax rate reconciliation. Okay. Now, I have explained majority of the information on the screen previously. I want to now look at our income tax expense note with you. On the left side of your screen, please. Now, if you look at our income tax expense note, our deferred tax section, if you look at our deferred tax section for 2021, we now recognize the deferred tax relating to the taxable temporary difference for 2021 from our deferred tax calculation. If you look at the right side of your screen for me, please, we have unused tax loss that we created, 8,100. You can think about your journal, which I've included here as well. We debit our deferred tax asset and we credit our income tax expense note. Remember, your income tax expense, it's an expense, therefore increase on the debit, decrease on the credit. If we credit our income tax expense, now, profit and loss, we need to include our bracket. Okay. We're still looking at 2021, please. Now, look at your tax rate reconciliation in your income tax expense note. We will have a reconciling item which relates to our unused tax loss not recognized previously. Not recognized previously. 187,650. Remember, this is now the difference. When you look at our green block, the 725 minus 30, 695,000 times 27%. We did not recognize this previously, but we are going to use this now. Okay. Now, look at your 2022. Again, only your 2022 column, please. On the right side, we've included our current tax calculation. Now, we have indicated that we utilized 725,000. We've utilized 725,000, but this resulted in 2,000 loss for 2022. Therefore, in our current tax note on the left side, we've included two line items: recognition of unused tax loss not previously recognized. Remember, we did not recognize that 695,000 amount, but we recognize it now to be able to use it, right? And then unused tax loss utilized the amount that we have used in our current year, 725,000 minus the 2,000. Then your tax rate recon, again guys, think about what's included at the top but not at the bottom, and include your recon. And this will be your unused tax loss utilized that was not previously recognized. Okay. Then your deferred tax note on the right side of your screen. Remember, your deferred tax note should be your final, your total in your deferred tax column. You will identify that this will agree to your deferred tax calculation 25650. If you look at your deferred tax calculation 25650, we need to identify our separate line items included. And we have our accelerated deductions for tax purposes, which is the 26190. And we have our unused tax loss, remember, relating to that 2000. Quite a mouthful. I've included a lot of notes. Please ensure that you work through the notes and that you are comfortable with this example. It's a good example.